Okay, g'day, Rudy here. So this video is off the back of a question from a subscriber, but he's got two hot spec stocks that he's in. So it's some good lessons here about sort of entry points, exit points, how to pick a price projection area. So I thought I'd do a video on it rather than just email him, messaging back. It's about two hot stocks in the sort of antimony battery metal space area. Hot. So, well, let's just go through them. Okay, so first cab off the rank is this MTM. So they've got apparently some. So you always need a good story, because none of them are making money yet, but that doesn't matter. They could be billion-dollar stocks next. But they got a technology for getting out antimony's in there, so that's the buzzword at the moment. But sort of getting critical minerals out with a flash jute heating technology. Anyway, we're just looking at the charts. So we're looking at weekly charts here. So the first thing you can see is the rounded bottom and the break. And so one of the good things about rounded bottoms is you can take the Fibonacci tool and take it from the breakout to the bottom there. And then it helps, gives you some. So this is the 2 times. So that's adding this move here to there, and then it gives you certain various other Fibonacci's. So it's just another thing to help guide. It doesn't mean it's going to hit the 2 and then drop, but it just helps you. So that's the first thing you do. Then so we've had the breakout and we've hit the 2 times. So we'll just go through it. So we've hit the 2, consolidated. We broke out. Actually, let me just move that. Sorry. So we break out here, and we've had a couple of those shooting stars, which are bearish chart patterns, but it hasn't broken this support line here. Move that out the way. So you can see here, and then it's just gone bang. Broken these shooting stars, so you can now draw a trend line here from here to here, because that's marked another bottom. Broke this shooting star stop, and so it's now got a new bottom that's forming, and we can now bring it back to a daily chart to help us with just how we can get some price projections. And the other thing you can use too is this blue line here. You can't use it on the weekly because it's too far away, but this is the 20 period moving average. That's what a lot of traders use for assessing rather than a trend line. But in terms of price projections, this is why I had this over here. So when so we had the wedge, so it's come up here, it's formed a wedge and then broken out of the wedge here. Okay, so what you can do is you take the move. So this is like the flagpole. So from here to here. Then if you take that and you add it to the breakout point, it gets you to. Actually, we can just get rid of that for now. It's complicated things. So you take that distance from here to here, and then you add it to the breakout point, so that gives you a target price of there. Again, it's not 100%, but it just gives you guidance as to where it might go. And then we've got the 4.2 fib there. But with these types of things, you don't really want to sell until it breaks down. But it's like if you want to try and get, like if you're not in it, go, okay, we'll let it go up there and see. Okay, so then it's come down, so it's just consolidating. Then we've got a new trend line here, and bang, So this is a daily chart, so it's hasn't dropped below the moving average or the trend line, so it's still a hold. And if you're in it, you're holding it, and if you're buying it, you're probably buying it and just with a stop down here. And then you'd again use the target, so from here to here, and add it to there, and so then that would give you, well, look at that. So round numbers, they love round numbers. So it's going for $1. Alright, so that's that one. TMG. Okay, so if we go to a weekly. Okay, so we don't have the round. What's going on here? Oh yeah, it's better. Okay, so we don't have a rounded bottom, but we've got our flagpole here. So that's this distance. So we'll get to that. So we've got the declining wedge here. So we've got designated resistance level and a declining wedge pattern. You know, I love them. So here we go. So we've got a breakout from the declining wedge. So that's a buy here. Stop down here. So it's gone up, come back, tested, and then she's off to the races. Now this one, so if you add this distance from here to here, gets you there. So it shot past that, so it's stuff that. I can go higher. So it's gone higher, and you can see a couple of these shooting stars here. But we're now forming another like pennant type formation, and it hasn't broken that support. So if we go to a daily, so this is a daily chart, so you can see it's still hovering around the 20 MA, but it's holding above here. So you know, you'd probably just buy that now with a stop below this low here if you wanted, if you're interested. But it looks like it wants to have a crack at 10 cents. I love these round numbers. See how they've once sold at 10 cents. So 20 cents is. So if we then want to try and get a target, so we didn't do it. So we copy this. Okay, so we take that move there, and then we add it to there. So assuming it's got the energy to break through here, then you've got a target of 15 cents. Should keep it at a round number. Okay. All right. Well, hopefully that helps you with some decisions. Of course, here, you know, if you've got a daily close below 7 cents, you'd be out. Otherwise, it's in the right space. Antimony, that's what it's all about. And I did have a look around. There is a this is a stock in, I think in Canada. Same sort of antimony mine stuff. So you can see once it broke, it hasn't had any pullbacks. Anyway, hope that helps you, mate. And thanks for the question. It's always good analysing charts. See ya.